Hello. If you wanted to buy a house valued at $300,000 and today you saw it on sale for $200,000, are you going to close the deal? Is it a done deal? Do you need to understand why it's such a deal? Is the deal justified? More importantly, are you getting a good deal? This is the dilemma we now have with Palantir.
Huh?
But is it a dilemma for Cathie Wood and ARK Invest? Obviously not, as they have loaded up the boat to an insane 1.6 million additional shares on earnings day. Let's talk about the fourth quarter earnings call, earnings result, price tanking to sub $30, and what I think will likely happen in the coming few days on lockout expiration and more. Stay tuned. Keep it simple. For those of you new to the channel, I am the Simple Trader. I share with you stocks that I have bought or are looking to buy that could have explosive exponential growth potential. No, I am not a financial advisor, so please understand this is all just for entertainment only. Full disclosure, I started a position in Palantir back in late November and managed to sniper my way in on an average cost basis of $18 when it was going on that parabolic uptrend. No more plugging, let's start drilling. Okay, so for the last 4 days trading, Palantir was trading to the downside. In my previous video, I said we could expect a pop or a drop following the fourth quarter results. We got a drop of close to 13% on earnings day. Why is that, you may ask? Well, let's talk about risk factor 1, which I did mention in my previous video. The lockout expiration date is 3 days following the fourth quarter earnings, as stated on the original prospectus that was lodged with the SEC. Now, what does this mean? Simply put, it means the insider shareholders of Palantir, like the employees and other investors, can now sell more of their shares on the open market. It's simple economics. When there is more supply, the price goes down. But you may be asking, why is the price tanking right now and not 3 days later? That's a very good question. And this is simply, in my opinion, that people know about the lockout and want to either cash in preemptively or cut losses in anticipation of a bigger drop in share price. The other possibility of the stock selling off is what I believe to be a bit of a misconception with regards to the actual fourth quarter results reporting. We'll discuss this in the next segment. Okay, so Palantir held their fourth quarter results earnings call on Tuesday. The key takeaways for me are overwhelmingly positive, and I can start to see the seeds that Palantir planted years ago starting to grow and bear fruit. Listen to Alex Karp.
Institutions and societies which implement software effectively will dramatically outperform in every context. In the military context, in the clandestine context, in the COVID context, in the context of every commercial entity that we're involved in, and everyone I've ever seen and everyone you've seen. In fact, software is the language of our time, and a mastery of software will determine what works and what doesn't. The numbers that you've seen are a reflection of our bet that this would happen. They are a lagging indicator, and we believe that the transformation which is happening in the world now will accelerate, and that the way in which we're providing software, both Foundry, Gotham, and our ability to scale this through Apollo, will be the way that everyone at some point will actually try to build software, and the way in which institutions will procure software, because of a dialectic of macro and micro conditions, a dialectic which will force change, because the winners will figure this out.
So if you didn't understand fully the big picture that is Palantir, then this should hopefully have given you an overview of Palantir moving forward and how they plan to dominate software and data analytics in more than just a systemic way in the coming years. The COO of Palantir, Shyam Sankar, described some of the key developments of Palantir in 2020, which includes the new partnership with IBM, which I touched on in my previous video. Simply put, this could expand Palantir distribution exponentially, which means more sales and more revenues, but more importantly, more market penetration at the commercial level. I think Wall Street is sleeping on how big this could be. Listen to Shyam and how he describes this moving forward.
Last week, we announced a groundbreaking partnership with IBM, where IBM will OEM a number of Foundry modules in its Cloud Pak for Data offering, enabling commercial customers to easily build AI-infused applications, leveraging a trusted data foundation and enterprise AI. This partnership dramatically expands our distribution capabilities, leveraging IBM's data and AI's 2,500 sellers. For context, that is a sales force that is larger than all of Palantir. along with an already large install base of Cloud Pak customers. We're very excited about what this partnership means for our go-to-market in 2021 and beyond. The response since the announcement from prospective customers has been incredibly strong. There's a lot of momentum, a lot of energy.
Before we start drilling into the numbers and earnings presentation, I want to share one more key takeaway I got from the earnings call Q&A section that adds more flames to my thesis on Palantir with regards to growth.
We are very much at the beginning here. We just did 45% growth in 2020. We expect to do, 47% growth in 2020. We expect to do 45% growth in Q1 of 2021. And we are only in 24 of the global 300. But I think looking at that kind of misses the point around the TAM expansion that's currently happening. Look at the channel partnerships with Fujitsu and IBM, amongst others, where we're not just distributing to the top 300 or the top 1,000, but really we have the ability now to distribute to the entire market, potentially tens of thousands of customers.
I hope you see the potential they have moving forwards, which is to target the entire market. Wow. As I said in my previous video, I really believe 2021 could be the breakout year for Palantir. Okay, so when we take a look at the presentation, this slide on the loss from operations is where I think some of the bearish sentiment may have taken flight. We see that the loss from operations in the fourth quarter year over year has increased slightly to $156,000. But the combined year-over-year loss from operations has pretty much doubled to $1.17 million. So on the surface, there may be some people selling because they see huge losses on paper. But why is that? Well, the contributing factor to this is the stock-based compensation of $1.2 million, which they gave to their employees. But this doesn't really affect the overall status. And as you can see, the adjusted operating income is actually positive. And the adjusted quarter 4 year over year went up from negative 31% to a positive 32%, and overall year over year it went from negative 45% to positive 17%, with the bulk of this gained in the fourth quarter, which means what? Simply put, it means quarter 4 was just meteoric for Palantir, but I'm guessing here that most investors actually miss this. So essentially, when some people start selling large positions, it inevitably drives down the price, and also we see some increased short selling that I will touch on in the next segment. Now, further to this is what some investors completely put their investment sentiment on, and this is the age-old earnings per share indicator. Now, in the third quarter, Palantir posted a surprise positive earnings of 9 cents per share, which destroyed the forecasts of 4 cents by 125%. Now, the consensus earnings per share for the fourth quarter was 2 cents, and Palantir posted a loss, yes, a loss of 8 cents per share. Simply put, this could be why so many people have sold out. And simply based on this metric, one could argue a negative sentiment, as this company seems to have gone from making you money to losing you money. But we need to look deeper and at the non-GAAP figures, where we see the stock-based compensation also factored in again. Other things to note for me are the sales and marketing costs have increased, suggesting they are actively pursuing more business, which is good. Their liabilities have gone down overall, and their net debt has almost halved, and they have more cash. Now, what are the big ticket items that we as long-term Palantarians should be happy with moving forward? Well, let me summarize my bullish takeaways. Check this. Revenue growth was 47% year over year. This is just enormous. 21 deals were inked in the fourth quarter, with each worth $5 million or more, and 12 were worth upwards of $10 million. Government customers accounted for $610 million revenue and 56% of the total revenue, meaning they have significantly increased their private commercial customers, who now account for the bulk of the remaining 44% of revenues. We also see the percentage of annual revenue derived from their top 20 customers fell from 67% to 61%, meaning they have significantly increased their customer base but not impacting the actual revenues. Look at this. Average revenue per customer has increased 41% year over year, from $5.6 million to $7.9 million. This means not only are they retaining their current customers, they are actually providing such integral and added value products and services that they are willing to spend more money. That trend is just phenomenal for any business in any sector. Check this. Their customers now include 8 of Fortune 100, 12 of Global 100 and 24 of Global 300, meaning there is still a huge potential growth of customers. Full year revenue year over year has increased by 47% to a disgusting $1.093 billion. Let's repeat that. Revenues has increased by 47% to $1.093 billion. Also, as I touched on previously, their adjusted operating income has gone from negative to positive year over year, which is just phenomenal. And finally, their 5-year outlook now forecasts revenues of $4 billion, yes, $4 billion or more by 2025. Are you serious?
You can't be serious, man. You cannot be serious!
Okay, let's get the blockbuster out of the way. Cathie Wood and ARK Invest have gone all in. They have loaded up their boat to a tune of 1.6 million more shares on earnings day, meaning they have increased their position on Palantir by a disgusting 65% and some change. Holy cow.
Let me ask you about Palantir, which we just found out you've added to. Can you tell our viewers why you added rather significantly to your stake in Palantir?
Yes, they reported yesterday, and the stock was down on the report. It's interesting to listen to the CEO. He was speaking our language. He essentially said to investors, you know, we are playing in a massive space here, and we're going to invest aggressively now in order to capitalize on the exponential changes that are taking place here.
This has seen Palantir climb from 47th position on the ARKW ladder all the way up to the 32nd position. This is exactly what I predicted what may happen very soon in my previous video. Okay, the overall trend of institutional holdings is going up, as it was at 19% on 12th of February and has gone up to 21% on the 17th of February, 5 days later. If we look at Fintel and the SEC filings, it shows a ridiculous number of institutions piling into Palantir stock. The smart money is loading up. But why is the stock falling? Well, the nature of the market is unpredictable. But if we take a look at the short interest, we can get an idea of what may be going on. According to these figures in Fintel, we see that the stock is being shorted significantly. We can see the huge volume, and a lot of people were clearly selling. And then over the last 3 trading days, the short volume has picked up again, which in turn shows us it drive the price and sentiment back down. If this trend continues back to the early February levels of over 25% short volume, then we could continue to see the stock price trend down. I don't see this happening with the current market sentiment towards short selling and the inherent risk of over shorting a stock. To summarize my thoughts on what's going to happen and what I am going to do about my position, is quite simple. Nothing. We as retail investors only have one solid winning weapon and combination against the stock market and the big players, and this is time. Palantir for me is a winning company in the long term, as evidenced by their 4th quarter results. I've always been saying that deep drilling into a company is key to your investment success, because if the company has exponential growth in an expanding market and is above the competition, or even better, has monopolistic potential, then if those boxes are all checked, it will win over the long term and it will go up. Short-term fluctuations and sentiments can basically be wiped out. I know it's easy for me to say since I got in at $18, but even if the stock goes to $10, my conviction remains the same, and that is my long-term 5-year target is $500 for Palantir. Okay, so I do have a plan of action and it's simple. I have cash on the sidelines, and guys, seriously, remember to always allocate some spare cash for times like these. If the Palantir flash sales continue and its price continues to drop below $25, I'm loading up the boat. At the time of recording, Palantir has regained 4% and is flirting with the $30 level now. I'm actually quite content with my current position, so I'm taking this as an opportunity to buy at bargain prices. I mean, we've seen Cathie Wood and what she thinks of this situation right now, right? Okay. This is not financial advice, but if you got in at any price over $35, then this is a golden opportunity for you to average down your cost. Believe me, this company in the long term is a winner. Again, if like me, you are a long-term investor, then these are the golden opportunities to load up the boat. Thank you for watching, and hopefully this gives you a good understanding of the recent events. And remember that I do have a strong position in Palantir, so please do your own due diligence and only risk what you can afford to lose in these hyper growth stock plays. Speak to a professional before you look to invest any of your money. If you are interested in other huge growth stocks that I have in my portfolio, please check out my other videos. For more huge growth stock picks, analysis and updates, please stay tuned and consider subscribing to my channel so you get the information first. I am The Simple Trader. I try to keep this very simple and will simply see you next time.